I'm gonna start making some videos here in reference to what I was doing this week, what has been going on. Okay, so of course, smart money trading, supply and demand, it is for me the way to go. Easiest way to trade because it sticks with the basics of basically support and resistance, price action, and supply and demand, which is basically the same thing. Support and resistance, supply and demand, whatever you want to call it, pretty much the same thing. Is the principle that counts. So this is what I was doing. So we can clearly see, I can clearly see that we are in a downtrend. We have our peak formation high up in this area over here. Let me just make this a little bit smaller. Okay, so we have a peak formation high over here. And so we started making lower highs and lower lows. And the way I've been using this Renko system here, and by the way, if you want to get this system here, the Renko, this is the site you go to, ovo.cz. People keep asking me, these are the mean Renkos here. You go to products if you want, and you want to make sure you get the mean Renkos, because this guy has created a lot of different type of offline charts. I find these to be the best Renkos. You can download some Renkos for free, but you have to mess around with the ATRs and things of that nature, doing math and all that. This guy here pretty much developed these so that way they can mimic the candlestick charts, which is why I like them the most. So you can test drive it for 15 days, as it says here, or you can buy the license, which will give you, it's only $40, and it will give you 3 licenses, which means you could have it on 3 different computers. You can actually even, what do they call it, license self-care. You can click on that and you can clear out all the computers that it's on and put it on some new computers if you want. So beautiful, love it. Then you're also going to want to get a free MT4 utility. It's an Omnia Remote. This Omnia Remote acts as a this is how you shift from what we consider to be time frames, except it will be brick frames. So as you can see here, it has these 2 arrows. It has a number 100, and you can just switch between the brick frames. So it's going to look a little bit something like this. So right now I am on the 120 brick frame. I can move up to the 240, the 120, go down, and they skip in increments. It doubles the increments whether you're going up or down. So from 60 it goes to 120, from 60 it goes from 30. But you can also put in your own brick frame if you want. And people keep asking me, well, what's the brick frame and so forth. So this is what I normally do. I normally start on a 60, right? And then I'll go to my candlestick chart and I'll go down to the 1 hour. And I have a little notepad I keep up here as well. So for my GU, the 60 brick frame equals the 1 hour. So what I do is I look at the 1 hour, and then I try to see if it coincides with the actual Renkos. Does it look the same? Are we creating the W, the M, the big W right here, which is exactly what we are. So this 60 brick frame represents the 1 hour. The 120 would represent the 4 hour. As you can see, if I go to the 4 hour here, you see that how it looks. And so that way, because since, if you don't know, Renkos are price based, they're not time based, which means that I know for myself and a lot of traders, we run to the chart every hour, every 4 hours. We know that there's going to be a new candle printed. Here, a new brick is going to be printed once it reaches a certain price. Or the way I like to look at it is once it reaches a certain amount of pips. And these pips are calculated by this particular number here. So each brick is not going to be 120 pips. What we do is we drop off the 0, then we double the number. So each brick is actually 24 pips. So whenever price moves on the candlestick chart 24 pips, we will get another brick. And so what's beautiful about having this coincide with the candlesticks, the way these Renkos are made, is that it pretty much will run the same way in the same time frame as the candlesticks, because we have it kind of mimicking. But as you can see, it's without all of the noise that's included with the candles. Let's go back over here. So you see you have all this wick action here, and you have all this manipulation. with Renkos, there is no manipulation. We do have some wicks and so forth, but you can clearly see what the trend is. And so there's plenty of ways of using Renkos. You can use it in many different methods. I've used it with market makers method. I've used it with harmonics, and now currently I'm using it with the smart money concepts, institutional trading, supply and demand, whatever you want to call it. And so I have one here that's straight colors, and then I have one that's another template that's just no colors at all, so it helps me to see really just structure itself. It's the same concept as when you take all your candlesticks on a regular chart and you make it one color, so that way you're not getting psychologically confused or getting any type of anxiety because you're seeing, red and black. Is the price going up? Is the price going down? So it's the same particular concept. But for this particular video, I'm going to use color so that way I can show what's going on here. Okay, so let's take this off. Well, it's there. So I opened up a demo account here. Let me just remove this EA, and then actually I don't need to. I'm just going to load it back. There we go. Let me get behind the panel right there. Okay. So this is the trade that I was in. GU kind of slapped me a bit today, but that's because I wasn't really focused. So I'm just going to go over the trades that I was in, how I read the Renko charts, where price is heading, and so forth. So of course, if we scroll over, we see that price is clearly in a downtrend, right? So we have this peak formation high over here, and we have price that broke this previous low, higher low, and price kept coming down. So we're still making lower highs and lower lows, lower high, lower low, lower high, lower low, lower high, lower low, and then we started making our first higher low. So again, for myself, I just look at basic structure. This is a 4-hour time frame, so going back to the 60, you get better entries. So how am I using supply and demand, support and resistance, smart money concepts with this with Renkos? So we know that we're in a downtrend currently, right? So we've broken this low here. Price is coming up. We're seeing it breaking this. So it looks like we may be going into an uptrend. And the reason why I say that is because this previous lower high here has been broken by price. You see here, it broke it once and it broke it twice. And then we've come down and now we're heading up. And of course, we made our first higher low, and we're making higher lows subsequently. We have not broken this previous lower low here. So we are getting some bullish sentiment. So this is the range in which we trade. So when it comes down to the order block or supply and demand, where the order blocks are, where would that be? Well, first, one of my first nuggets that I talked to a lot of people about, being that I essentially am a harmonic trader and fibs have come to be a part of my DNA. So once I drew my fibs from, once I saw the higher low, we know that the first higher low, once we get a peak formation low or high, if this does not break, we'll always come back to a 79 or 786 or an 88.6, which is in this area right here. And as you can see, that's exactly what it did. It came down to the 88.6. And that's just a little nugget that I like to keep in my repertoire, to know that price will always come down to that once it's making its first higher low. And sometimes I say, or you may wonder, well, how do I know that's going to be the first higher low? Well, what happens here is that we have a push up, we have a pullback, and then what happens is we broke this level of structure. So once we break structure in smart market concepts, and just in general, when structure is broken, that there is always a retracement back to the initial point of where structure was broken. So right down here, we have the last down before the up candle. So using these particular two candles here would be the order block. I like to draw out my demand zones from the last candle to the wick of the first bullish candle. Another nugget in reference to this price coming back from the first tap into the 78.6, 88.6 realm is that it will make two taps to that zone. So after it has come down this first time here, if you're patient enough, you wait for it to come back down to the second tap, which is what it did, and now we see we're heading back up to the 61.8, 78. The first tap into the zone when we possibly are going into a trend change will result in a reciprocal of a 61.8 target. Usually in a trend, the deeper the retracement, the shorter the type profit range, which be like if it was a 786 or 886, I will be going for a negative 27 or 127 as a target and not the 61.8. But again, as the nugget, that first tap when a trend change happens will always bring you to the reciprocal of the 61.8. So had I gotten into here, I could have waited it out until it came up into here. And so you could, of course, take in the trades up in here. I got a little caught up, wasn't focused for about 2 days. And when price started coming down, I was in some sells and some buys. And so I got cooked. But another nugget as well is that if price, that's why I like to use the 27. Actually, this is the negative 27. I have a 27 here instead of a 23 because that gives me a lot of indication of where price is actually heading. When it comes below it and stays below it, we're actually heading down. And when it comes above it and stays above it, we're actually heading up. So price comes down to the 78.6, then goes to our 27, taps it 3 times, takes out the liquidity here, here, and here, and then comes back down for that second tap into the 786, 886 realm. And then now it's taken off to the 61.8. So we definitely probably could be going into a bullish sentiment because the level of, where's our high right here that needs to be broken? There we go. So if we break this here, most likely we're going to retrace and continue up for a bullish sentiment. However, let's go back here and clear all that out. I don't even know why this is even happening this way. Just bear with me. Okay. Let me just take this off. Okay, so I still think we may come down because of this fib retracement right here. This retracement that came up into the 886 and we stopped at a 113. So I have a feeling we're going to come back up into this area and then come down to a 27%, and then that's going to be at 27. It may even come down to 61.8, and then we're going to have that real push up possibly next week because today is actually Wednesday evening, well, Thursday technically from a Forex perspective. So I have a feeling we still have a little bit more down to go, but you never know. You never know. But okay, so that was what I was going through this week, messing around with GU and I think EJ was also in, but GU has been mostly what I've been doing. So from a perspective, let's go up to the 4-hour so it's better, it's cleaner. As I mentioned before, you can see clearly the structure levels of Renkos, and you can also see where the supply and demand levels are if you are trading this particular trading method. Again, we know it's usually the last up candle before the down move and the last down candle before the up move. And the 3 rules, of course, is that for that to be a valid order block or supply or demand zone, it must break structure. And so we have a minor break of structure here. So I'm just going to start from the top up here. We see the price has been coming up and it comes up, it makes a higher low, it comes up again, it gives us a double top. And what happens is I'm looking for a minor break in structure or a minor change of character. And that happens right here. So price comes down, it reaches, and I'm not going to use the wicks. Some people use the wicks. I don't necessarily use the wicks. I really want to see a full candle, a full brick break. So we come up and we came back up. We create the first higher low. We came back down. We've broken structure here. So this is the first change of character where price is letting me know that we most likely will be going into a downtrend. And so this is when I can draw out my supply zone right here. And let's see, price comes back up into the zone. And we have a drawdown of 14 pips, which is not bad for GU. And then we drop. Now, the real structure and change of character would be here. Okay, let me just take this off. I'm going to use this one because I'm able to stretch it out. We'll just sort of push up a button. There we go. So the real change of character is here when price actually breaks down here and then we come up. So how do I know where to place my trades with Renkos? I could use the wicks, but I found that when price actually comes up and I start seeing bricks that has this like a half shaft wick on the bottom, those are usually my entry points. So of course, from a fib perspective, we're looking for a premium or discounted zone. In this case, we're looking for a premium. We have the 618, so anything above the 50%, what we're looking for before as we taking our trades in a premium area. So price, what did it do? It came back up into the 61.8. Usually price actually comes up to the top part of that wick area, but in this case it did not, which is fine because it came up to 61.8, and that would have rendered, let's see, what is that, a 3 pip drawdown, and then price came. Just take off this, I want to keep it nice and clean. So again, we have price breaking structure. So we have once price breaks the structure, we're looking for the left over or left behind supply zone, and let's see where that one would be. So price, this right here is a nice drop, base drop. So my entry would most likely have been here. Again, this the top of the shaft of this brick, and that would have rendered me 13 pip drawdown. Let's get that right there. Okay, so again, we have a break in structure. We continue in a nice downtrend. And matter of fact, let me just go over here for the change in character. I have us all labeled up, which would be right here. And this is my entry. This would be my entry here. This would be my entry here. Okay, so price comes back down, comes up. I would have been looking for price to come back up into this area, but that would be a very deep retracement. So if I was to pull my fib out, let's see where it came down to. And we didn't even make the 50% mark, but that's okay. This could have been a nice entry right here. Now, smart money, we do take entries above the 50% and below the 50%, depending on what direction. But usually with Renkos coming into that 61.8 area, that is a nice golden primary zone that I like to look for. So we have another break of structure here. Then price comes down, comes back up. Now I don't really quite see, I do see shaft entries. I'm gonna call these shaft entries. And that would have been a bigger drawdown than usual. Let's see. That's about 17 pips. Or you can just draw out the last bullish candle along with the wick of the bearish move, and then that would have rendered you 8 pips drawdown. You may be wondering, well, why don't I always use the last candle is because price doesn't necessarily always come back into that area. So I found a more an area which would definitely get me into the trade and not necessarily missing it by a pip, because sometimes you have to think about spread as well. So let's look at this area right here. Let's put this right here. So yes, price did come back into the actual supply zone, right? So 2 pips. But your spread sometimes, most likely, I probably would not have been triggered in. So by me using this shaft area, it gives me that room that's needed for my margin. So that way, not my margin, but my spread. So that way I can be triggered in with no problem. So that's why risk management is good to use. So okay, we come back down again. We have another break of structure here. Now this is where it got kind of a little bit tricky, because you know you're in a downtrend, you're in a downtrend, and all of a sudden you start getting a little choppy going on, which is how we know that the trend most likely is changing, because now the banks, the institutions, the hedge funds, now they're starting to accumulate orders. So now they're just whipping and just slaying people, buys and sells, up and down, up and down. So that's exactly what was happening in this instance. So let me go down to a lower time frame. Okay, so we got this level that was broken, right? So from this point on, let's see what's going on here. That's okay, nothing. From this point on, price is now breaking, breaking structure. So we have a little bit of a change of character here. And so we broke the structure, we came down, created a lower high, a higher low. People use the change of characters in certain ways and all this other stuff. I particularly don't. I'm looking for a change in character in that I'm creating, I'm breaking structure, and I'm creating a higher low. So what happens is we created a low, a higher low. We did not come up here and break. We create another higher low. Then we broke this structure. So now I'm kind of confirmed that we are showing some bullish sentiment, because you see from over here we broke this structure and we came back down. This would have been, let's use blue for the bullish. This is how I normally would do my order blocks. Now what you could do is use the whole bullish order block and you would have made some, but of course you see you probably would have been taken out when price came back down into it. So it's price. Here's another nugget that I found to be true. So we have this first 786 tap right down here, which we know, right? Once price, how can I say this? Once price does 2 higher highs, price will return back to that first initial 786, 886 zone. And so that's what happened here. We have this initial lower high here in this area. Price came 786. It broke it with this first higher high, so these don't count. So this is the one that broke it. That's one. We came back down, and then we came up. We made the second higher high, and then we came back down into the initial move of the 786, 886 realm, and we're heading up to our initial 61.8 first target, right? And the 61.8 is going to be exactly where a nice supply zone has not been mitigated. And so it all lines up with what we're looking for, right? So this is a 13.5 pip zone, which most likely we won't even hit. We could say, well, why we're not using this zone? Well, we can see that this zone here has been mitigated, right? And we know what the rules are as far as mitigation. So it's already been mitigated. It's been mitigated, but now this one here has not been mitigated. So that's why I'm not looking at this zone right here. And so we have this wick here, which was taking out that liquidity. And we have this here, which is taking out these areas of liquidity here. Another nugget in reference to if you want to use Renkos, The wicks represent higher highs or lower lows on the lower time frame, the same way with candles. Not really much of a difference. It's just how it's looked at. People wonder, oh, you know, it's a different scenario. It's a whole different amount of trading. It's the same way we trade. It's just a cleaner look. That's all. And you don't need to be running into the computer every hour to just see what's going on and so forth. Okay. And so that's why I'm waiting for price to come up into this area right here. And I'm expecting price to actually drop off and to actually break this low. But we'll see what price does. So in the same manner, you can go down to a lower time frame to make sure structure has changed. It is changing into a bullish or a bearish sentiment before you hop in. It works the same way as on candles. But this is just why, a brief nugget of why I like using candles and how you can, not candles, but Renkos, and how you can use Renkos to trade smart money concepts or supply and demand. Again, you can see clearly structure being broken. You can see where the supply and demand zones are. And another thing too as well, technically we use the last up candle before the down move and the last down candle before the up move. But let's take this whole area right here. Technically, this whole area is actually the actual supply zone from a bank's perspective. This is where all their money is. We know that we now are entering into a downtrend. So this is where all their money is. This is where they are inducing the retail traders, the so-called dumb money and things like that, to take a buy before they make their move. So technically, it's not so much that price did not come back up into this area and that we were wrong. Actually, this is the whole zone. Some people mark up the whole zone and then take 50% of the zone, or they'll take the last up candle, this whole area here, and use 50% of that. But from a technical perspective, this is the actual zone here. And the same thing in this area here. That is the actual complete zone. So what some people do is they'll just take the bottom of the zone and they'll wait it out until it comes out of it. But that technically is the complete zone, just like this would be the complete zone here from that candle there. But as I've been backtesting Renkos and seeing how each pair moves within the Renkos itself, I'm able to determine where to place my zones at, so I can get a much cleaner and a much more precise entry. Okay, so I don't want to make this video too long. Hopefully I answered some questions I've been getting in reference to the Renkos. What I like about this is that really I have no indicators on the chart. Although the Renkos is an indicator itself, I do have this little Don chain here, which gives me a little bit more perspective, as well as for confirmation. So in a sense, let me just go over how I use the Don chain. So I know that I'm in a downtrend, right? So whenever price actually comes above the Don chain, I know that I should be looking to my left for some type of entry, right? So we come down, we come up under it, then all of a sudden we start rising above it. Anywhere above this Don chain, I know there should be an order block, a level of supply that I'm looking to for my entry. And same thing over here, we start coming above it. Here was the entry. We start coming above the Don chain, here's the entry, and so forth. Now that we technically look like we're going into a bullish sentiment, which in reality, really the bullish sentiment would not start from a structural standpoint until we break this area here. So if we don't break that, technically we still are in a down trend. So I have a feeling the price is going to come up to the 61.8 area here and then continue downward. Until we break this area here, I'm not looking for any confirmed buys just as of yet. But it's GU, and we know we can get massive pips without it breaking structure, and that's pretty much it. That's all it is, folks. So until the next video, if you have any questions, hit me up and I'll try to answer them for you. Again, the site you need to go to for the actual mean Renkos is ovo.cz. It is a mean Renko, and you would also need the Omni remote, which is this right here. think I explained the Omni remote already as well. And again, like I said, you can also put in your own pretty much brick frame. So you don't necessarily have to stick with the 1 hour, the 4 hour, the daily, and things of that nature. Whatever works well for you, whatever looks the cleanest for you, you can go ahead and use that, and you may get a better risk to reward as well. Okay, until next time, talk to you later.